Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to be doing a deep dive between the long call option strategy and the LEAPS option strategy. I'm going to show you in detail how you could use both these option strategies in order for you to make consistent income. Now, if you're new to options trading or you're trying to use options in order to get some extra income, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, we're going to be comparing the long call option strategy versus the LEAPS option strategy. Now, for those of you who do not know, the LEAPS option strategy stands for Long Term Equity Anticipation Securities. It is a mouthful. That's why we use the acronym LEAPS option. Now, before we get into that, I always have two requirements for my viewers and my subscribers. Quite simple requirements. Number one is going to be always make sure to do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. And for today, we're going to be doing some due diligence. The second criteria is to always make sure you have an exit strategy before entering any options trade. That being said, let's go ahead and get down and dirty with options. Now, for today's video, we're going to be featuring none other than Palantir Technologies, ticker PLTR. Now, for today's video, I want to start off a different way. What I'm going to do today, I'm going to show you how to do some basic due diligence if you're new to options trading. This is going to be quite fast, and I'm going to promise you everything can be done on the Robinhood platform. So let's go ahead and start by opening the advanced feature right here, and that's going to open the chart for us. We're going to go over to the 1 year mark in order for us to see what Palantir has been doing over a year. Now, one of the key indicators I use is going to be this blue line right here. And this blue line right here is known as your MA200 or your 200-day moving average. This simply tells you where the stock price has been trading for the last 6 months or the last 200 days. So if you go here, you're going to see it's been trading around $75. Now, the other thing I like to make sure I know for a fact is the share price. The share price right now, if you look to the top right here, is going to be $133.2. So right away, I know the current share price is trading a lot higher than where the stock was trading for the last 6 months. Okay, another indicator that can be used if we go to the bottom is the RSI or the Relative Strength Index. Now, this is a momentum indicator. Now, if we were to go and check out the RSI, you could see the RSI is a bit over 60. So the RSI is actually going into overbought territory. Now, if you guys don't know what the RSI is, just go ahead and search the channel. I do have a video explaining the RSI and how to use it in order to make a good options decision. So we have an RSI of above 60. We have a 200-day moving average around $75, and our current share price is at $135. So let's go ahead and go back to Palantir now, and let's continue with doing our due diligence. So we're going to scroll down right now, and right here you see 1 day. This is the movement of Palantir for just today only. You could simply go over to the 1 week and see what it did for the 1 week, which is at 5.69%, and then the month, it's up 7.81% or $9.65. You could continue doing this if you want. Now, the other thing you're going to do, you're going to keep scrolling down and you're going to find out what the company does. Even below that, you're going to see some of the key statistics that you're going to also use in order to make a decision. Now, remember, this is all part of doing your own due diligence. So right now, the market cap is $314.13 billion. What the market cap tells you quite simply is that this company is worth so much, is not going to be going out of business anytime soon. That's quite simply how you explain it. Now, the 52-week high right here is 135.28, and today's high is 135.28. That tells you one thing. Currently, the stock is trading at its 52 high, meaning the stock is trading at the highest ever traded. You should definitely use that to make a decision. Now, before I continue, I want to ask you guys, based on the information you have accumulated thus far in this video, what option strategy would you guys do right now if you had to trade Palantir? Now, continue with your due diligence. the PE ratio or the price to earnings ratio. The price to earnings ratio is 576, and I'll tell you right now, that is extremely, extremely high. The 52-week low is $21. However, the 52-week high is 135. That's a huge gap between the two. Now, volume. The average volume is 86 million. Now, you need a high average volume. It makes it easy for you to get in and out of the options trade. Now, let's go ahead and go down some more. Now, remember, all this information you're getting is right here on Robinhood, so you don't need to go anywhere else. Now, trading trends. Robinhood investors. Robinhood investors have been buying Palantir for the month of June so far. For the previous month, they have been selling more than they have been buying. If we go over now to hedge funds, we're going to see for the last couple of quarters, the hedge funds have been selling out of Palantir way more than they have been buying. So the green represents the buy, the red represents the sell. Now let's switch over one more to the insiders. And just like the hedge funds, the insiders have been selling out as well. And their sell is way higher than their buys. So let's go ahead and we're going to continue down to get some additional information. So the analyst rating, 28 analysts rated this stock, and all they came together and said that this stock is a hold. If you already have it in your portfolio, you just keep holding it. They are not saying to buy. As you can see, the buy here is 21%. They are not saying to sell. The sell here is only 17%. So the majority of people, analysts responsible for keeping an eye on this stock, says it's better to hold and not buy, not sell right now. So let's go ahead and go down just a bit further. Now, this stock has a 2-star rating. The star rating depends on several different factors. A few of those factors is going to be right down here. So the fair value. The fair value for Palantir is $100. However, we did go over the share price. The current share price is $135. So Palantir is trading higher than the fair value. Okay, uncertainty. It says here that this stock's uncertainty is very high, meaning this stock is going to have very high volatility. Now, for an option trading, that's going to be extremely, extremely good. Now, let's go down and we're going to check out one more. So these green dots here is going to represent whenever they're going to have their earnings calls. As you can see to the top here, earnings. Now, the estimated price per share for the next upcoming earnings has not been updated yet. It will be updated as the time comes closer. Then now you're going to go down to the actual. So the expected is going to be August 4th after hours. This is when they actually going to be releasing the earnings. Now, once again, this also is subject to change. So there you have it. That's just basic due diligence. That took me literally less than 5 minutes. Now, based on all this information, I could always take and go ahead and make a more informed decision. Now, let's get into the option strategies for today's video, and let's go to trade Palantir options. Now, Palantir currently, like we saw, is trading at $133. If you were to buy 100 shares of Palantir right now, it would cost you about $13,300. That's where this option strategy comes into play. Now, before I get into these option strategies, I just want to let you guys know, if you guys need any additional help with options for income, I do offer one-on-one coaching. That link is going to be in the description below. So our strategy for today, we're going to go to buy, we're going to go to call, we're going to choose our expiration date. The expiration date we're going to be choosing is going to be, let's go with November 21st, which gives us 171 days to expiration. 171 days is going to be probably like around 6 months. Now, we're going to go down and we're going to choose our strike price below the current share price. Once again, the share price is 133. So let's go ahead and we're going to go down. Now, the price I'm going to choose is going to be $100 strike price. Now, there's several reasons why I would choose the $100 strike price. The main one is going to be, though, we just saw that Palantir's fair value is at $100. So I feel a lot safer choosing the $100 strike price. With the $100 strike price, I'm going to have what's known as a delta. The delta is going to be 0.8. When doing these option strategies, the delta is of integral importance, and you're going to see that in just a few minutes. Now, once we go to the end, we're going to have the price we're going to have to pay for this option because this is a buy option strategy. The amount we're going to have to pay for this is going to be $44.15. In the real world, that's going to be $4,415. And that's simply because Each option contract contains 100 shares. So you multiply the price per, which is 44.15, by 100, and that's going to give you $4,415. This, investors and future investors, is the long call option strategy. The most important ingredient for the long call option strategy is going to be your strike date. Your strike date is going to have to be lower than 1 year. That's why it's going to be a long call. Now, why would anyone want to do a long call? Glad you asked. So, like I just mentioned, if you were to pick up 100 shares of Palantir right now, you'd have to pay upwards of $13,000. However, you could use the long call option strategy in order to control the same 100 shares for a lot less. In this case, you're going to be paying $4,400 to control 100 shares of Palantir as opposed to spending $13,000 in order to buy 100 shares. So that right there is why someone would want to use the long call option strategy. Now, once you have a long call option strategy in your portfolio, there's different things that can be done with it. So I'm going to go ahead and go over just one for today. In the next video, I'm going to show you other strategies that can be used with the long call. So here's the power of the long call and why people choose to have it in their portfolio. If this share price right here goes up by $1, then your overall option contract is going to go up by your delta or by $80. So every dollar increase, if the share price goes from 133 to 134, then your overall contract and in addition, your overall portfolio is going to go up by $80. Now, if the share price goes up by $10, then your overall portfolio is going to go up by $800, which is going to be your delta multiplied by 10, which is going to give you $800. That is the power of having a long call in your options portfolio. Now, with different option strategies come different risk. So vice versa to this, if the share price does drop by $1, your overall option contract, in addition, your overall options portfolio is also going to be down by $80. So always keep that in mind. So that right there is the long call option strategy. Once again, you go to buy, you go to call, you choose an expiration date inside of a year. Then you go ahead and choose your strike price based on your due diligence, and then you're going to have to pay for the option contract. The whole point of having a long call in your portfolio is that it allows you to control 100 shares of the stock for a lot less than if you had to buy 100 shares of the stock outright. Now, the other option strategy is going to be the LEAPS option strategy. So let's go ahead and get out of here and we're going to demonstrate the LEAPS option strategy. So the LEAPS option strategy is almost similar to the long call. So we're going to leave the buy, we're going to leave the call. Now we're going to select our strike date. The strike date we're going to be going with is going to be June 18th, 2026, which gives us 380 days to expiration. Now, the major difference between the long call option strategy and the LEAPS option strategy is going to be your strike date. For it to be a LEAPS option strategy, it has to be more than a year out. Remember, I just showed you the long call option strategy is anything under a year. Vice versa, the LEAPS option strategy is a strike date a year and above. Now, we're going to go ahead and we're going to choose the exact same strike price we used for the long call, and that was the $100 strike price. Now, with the $100 strike price, we have kind of a similar delta, but then now we have to pay a lot more. The amount we're going to have to pay here is going to be 53.25 or $5,325. Now, why are we paying this much more as opposed to the long call where we only paid around $4,400? The difference that you have to pay this much amount of money for is going to be simply the time. Now, why would someone want to choose a LEAPS option where they have to pay so much more money as opposed to a long call? And again, the answer to that is quite simple. It's going to be time. With options trading, we always get the majority of everything right. We get the buy right, we get the sell right, we get the put right, the call right, we even get the strike prices correct. The one thing most options traders always get wrong is always going to be the strike date. By using a LEAPS option, it almost guarantees you to win the trade because now you have way more time. Now, with the American stock market, the stock market usually goes up a lot more than it goes down. So the more time you give yourself, the better chances you have of the trade working out in your favor. Now, once again, the LEAPS option helps you to control 100 shares of the stock at a lot less price than if you had to buy it outright at the current share price. So the reason why someone will want to use a LEAPS option instead of a long call option is because you're going to have way more time, a lot less time to monitor this trade. Now, for those of you that are new to the channel, the LEAPS option is one of my bread and butter option strategies that I have in my portfolio. And I've made several different videos about the different stocks I use. And I've also posted my gains and my losses with the LEAPS option. Remember, with every single option strategy also comes risk. So there you have it. That is the difference between the long call and the LEAPS option strategy. They both can be used depending on your portfolio outcome or your portfolio goals that you have in mind. Now, both the long call option strategy and the LEAPS option strategy are bullish option strategy. Whenever you decide to get into a long call or LEAPS option, you're of the mindset that the current stock you trade in is going to be going up as time goes by. So the long call versus the LEAPS option, feel free to use anyone in your portfolio. We're going to do a part 2 of this video. I'm going to show you some additional option strategies that can be used in order for you to make consistent income with both these option strategies. So, investors and future investors, there you have it. Now is a good time for you to go ahead, like the video, subscribe to the channel, ensure you hit the notification bell to get the second part of this video whenever I post it. And most importantly, if there's anyone out there you know struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Let's try to help as many as we can. Now, until the next video, keep pushing your investments.